U.S. indices have been breaking out to new highs today, led by the Dow, as was shaping up to be a really strong earnings season kicks off. There had been some concerns in the markets through the spring about valuations that perhaps prices were getting ahead of themselves relative to earnings. What we're seeing though, as start to move more deeply into earnings season, is that in fact the markets have been forecasting correctly a real uptick in U.S. earnings. The U.S. economy remains strong, and yet at the same time, overseas economies have been soft, and that's done two things. It's put the Fed on hold, but more significantly, it's also introduced the potential for more stimulus in overseas markets, particularly the United Kingdom and Japan. So it looks like we may be getting into another Goldilocks scenario, or a real sweet spot for corporate earnings, where we've got the potential for stimulus in soft countries, strength in other countries, providing a positive environment for corporate earnings, and at the same time there's no monetary hawkishness out there, so this could continue for a little while. We saw strong earnings out of Alcoa, we've had a big beat out of JPMorgan, we've had beats out of Delta Airlines, and it looks like we're heading for a strong earnings season. Keep an eye on guidance here. And what's that done? Well, look at this. We were in a huge sideways trading range for with the better part of 2 years here, between about 16,000 and about 18,360 on the Dow. Look at this now, though. We'd moved up into the higher end of this range. This post-Brexit quick knee-jerk sell-off didn't get very far, and it was rejected. A break of the 200-day average was quickly rejected, and look at this. Now we've just taken off to the upside. We've had the shakeout of the weak hands, and now the bulls have been stepping in a pretty big way. Blow this up to make it look a little more clear here. And look at this, even here, breakout to a new high. Well, this is a very positive. Look at this, very strong bullish green candle here. Suggests a lot of new interest coming in. And let's come down here and look at the RSI. Same sort of thing. We had declining upward momentum. Bang, we've broken out of this downtrend. Clearly, RSI is confirming an upswing in momentum for big cap U.S. stocks. We'll also look here at the S&P. And we're seeing the same sort of thing here in the S&P. We'd been range bound for much of this year. We had this little quick post-Brexit washout. Didn't last very long. Look at this dip below 2,000 was pretty much rejected. And here a negative candle, and then this big bullish engulfing pattern off to the races. S&P RSI also starting to break out of a downtrend again. Looking up as we head into earnings season. What could be some of the upside levels for this index? Well, this was 2120 to 2020 to 2120 is 100 points, measures you up to in and around 2220. We also could, based on a smaller measured move here, could see some resistance around 2190 for the S&P. For the for the Dow, on the other hand, now we're up above 18,500. This area here was 17,390 to about 18,150. So let's say that's about 750 points. So measuring the 750 and 1850 is about 18,900. Would bring you within striking distance of the 19,000 round number. So there is room for some movement based on the RSIs aren't overbought. The measured moves are suggesting there's room for some significant upside. And of course, as is commonly known in technical analysis, the bigger the base or the bigger the consolidation, the bigger the potential move. Well, here we're coming out of a pretty huge consolidation here. The only thing we do have is we could see some kind of a retrenchment in late summer between, say, mid-August, and the usual seasonal weakness is mid-August to mid-October. This year that could stretch on a little bit. We could see that push a little bit later into early November because of the U.S. presidential election and uncertainty over who's going to win at this point in time. I'll also just show the NASDAQ here briefly as I finish up. And interestingly here, this has got quite a bit of room for catch up. Here we're breaking out of a downtrend on the NASDAQ. This has been held back. Some of the uncertainty had put a cap on momentum plays. As though we're seeing things start to turn over and go, and the pendulum come back the other way, back into momentum stocks, back into higher beta names. We could see the NASDAQ has room for a significant catch-up rally towards 4740, and then from there we've got room for some significant upside just based on some measured moves out of these channels. But the big one, of course, we'd be watching would be the 5,000 round number. The composite has already regained the 5,000 round number, so there is room for the 100 to pick up as well.